welcome back. Let's go over the week of the 25th. This was another interesting week that we have here. And starting off with Monday, we see here a fib short, completed an entire measured move. But I'll show you one of the reasons why this is not a safe trade to take. Well, first of all, you have zero confluence on the 15-minute chart. Also, if you look at the 1 hour or the 30-minute chart, we are in the middle of a retracement. We're in the middle of a retracement back from a measured move. So we look for the lowest point of the chart to the highest point, copy, paste it from the lowest to the highest. But remember that as this setup is playing out, we're right around here. And this could easily go both ways. Yes, this can give you this quick measured move going down before continuing this measured move going up, or this can easily just respect the 14 EMA and the measured move would actually end up having the deepest retracement up here. So you'll end up being in the losing trade. And look how measured move from up here has perfect confluence here with this institutional level. So this is one of the reasons why you want to be careful in just taking any fib setup all willy-nilly just because you see a potential pattern. So here, yeah, it has a good indication. You see market structure break. It broke this low right here. So you see market structure break to the downside. You see a nice clean retracement here. Also, as you see this candle close on the 16, this candle close on the 62. And then the following doji also closing at the 62. This could give anyone a green light to go ahead and place a short and aim for that measured move, or actually for the 27 measured move because it has confluence with the 200. However, this is a setup that has very, very low probability, and I would not have taken it. So, of course, I did not take this trade. I hope no one took it either. There are setups that on the 15-minute, it seems, through hindsight, it seems like there's no confluence. But always look at the higher time frames. So if you look at the higher time frame, and if you see that we are in the middle of a retracement, do not take that trade. Just wait for the chart to give you the overall retracement and see if you can place an entry long, or just stay away for the duration of that session or that day with zero trades. All right, and now looking at the 26th, which was Tuesday, I had a very brief setup here. So we are overall making higher highs and higher lows. And right here, we had a beautiful clean market structure break to the upside. We had a very nice retracement. I entered at the 62 and the 70. I took profit at 10 pips. And then I believe two of my runners ended up getting stopped out at break even on this setup. I don't remember quite yet. And I don't have my journal with me in this desk in my office. So I believe that two of my runners were stopped out at break even. However, it was a profitable setup, but it was very ugly. This is also another day that is best to just sit on your hands and wait for the higher time frame to give you more clarity. So I had a brief setup here, but it wasn't something that in reality I should have taken. And here on Wednesday, on the 27th, this was a beautiful setup. And you see very clearly here that you have a double top. So the 1400 area was rejected. You see the price action now making breaking structure, making a new low, breaking a new low again down here. So you first break this low, now you're breaking this low here. It just broke it by 1 pip, but you're breaking the lows. So after having this this touch of the 200 here upon this retracement, I took my short, and it was a beautiful, beautiful setup here. And remember that I've said this all the time, and I also said on the previous video, whenever you see a double top, most of the time price action reverts to the opposite side, and after some time it needs to come back up to take out all the stops that were placed up here on the shorts from these double tops. So it's very evident and it's very clear, and it happens all the time. See double tops, double bottoms, price will move away, but eventually it will come back to take out the stops from the shorts or the longs that were placed on those pivotal points. So that was a very, very nice setup. And then here on the 28th, we had this massive, massive bearish impulse. Upon retracement, we had the kiss of the 62. We barely touched it. And I entered here at the 62. I entered all my positions at the 62 just because I saw the strength that it was having here. If you notice, this candle did not want to, it barely wanted to breach the 50 SMA. So upon this push here, I took advantage and I loaded up on my shorts, and I took 2 positions off around this area, and the last position I was actually swinging it, but due to greed ended up being stopped out at break even. Overnight I was up pretty nicely on my runner, but once I saw this session here opening, I was hoping that the market would come back and give me that the measured move to the downside. It didn't, so I eventually ended up just letting the position scratch at break even. So this shows you that a lot of times it's best to just take profit. This is also why I don't like swing trading, because a lot of times you have so much work done, so many pips going in your favor, to then overnight having all those pips retrace. And of course, we're not going to end up on the red because we know better, and our runners are always protected with a stop at break even or break even +1. I will start to go into detail on the next portion of the course talking about trailing stops. However, I just don't really like trailing stops with Forex. I do like doing it with futures, but not with Forex, because Forex is too volatile. And if you're trailing your stops with Forex, you are potentially going to be cutting your runners short too soon. However, I will hit that topic just because it is good for everyone to know, especially the traders that not only trade Forex, but trade futures, stocks, crypto, and so forth. So it's good information to have, even if it doesn't solely apply to the Forex market. And then looking at Friday's price action, this to me was horrible. I did not like it at all, so I did not trade it. However, if you do make this window a little closer here, and you look at the bigger picture, we did have a fib short setting up here with confluence, but I did not like this price action, so I did not trade Friday, which was yesterday. So now, since I have updated all the weekly recaps, let's see where are we trying to go for this next upcoming week. So what we see here on the daily chart, let me just make this bigger. So what we see here on the daily chart is that we are clearly on a bearish fib short here. Remember that on the 4-hour and higher time frames, we draw our fibs from the entire move. Do not seek the move or the leg, the break structure. You draw from the entire leg. All right, so I drew my fibs to the downside from the entire leg, also breaking structure to the downside. We saw this retracement here. We had a beautiful 70 short. However, this is a very delicate area that we're under at the moment. Why? Because I would assume that the market wants to give us some bearish momentum for the upcoming week. However, we have very strong dynamic support underneath us. So we have the 14 EMA creating dynamic support. We also have this support level at the 1357 area. So we first need to see if we're going to break this support before we can consider this to be a temporarily bearish environment, or if we're going to respect this zone here and this is actually going to take out all the shorts that place their entries up here. So this is going to be a very interesting week, or at least that's how I like to approach the market, and that's how I like to see everything in regards to trading. To me, everything is very interesting. It is very exciting to see what is going to happen on the next few days. How is it going to unfold? And depending on what I see, that'll let me know if I will be placing a trade, if I will be staying cash, or if I'm going to go long, or if I'm going to go short. So always Be alert with the higher time frames. This daily time frame is very important because it gives you a lot of information. So remember, we're currently on a bearish fib short with dynamic support underneath us. So we really need to see if we're going to break the support before continuing down. And if we don't break the support and if we keep seeing rejection, we might potentially come up to the 79 and then come down for a measured move short. So let's see what happens. And I'll see everyone next week on the next weekly recap. Have a good one and thanks for listening.